Ever wondered if you could save more on taxes? Or perhaps you might be feeling overwhelmed with the complexity of the taxation system. You're not alone. The labyrinth of tax laws can often seem daunting, leaving many of us feeling uncertain about how to navigate it. But what if there was a way to unravel this maze? A way that didn't involve bending the rules or testing the limits of legality? Well, guess what? There is. And that's what we're going to explore today. We'll dive into the world of taxes, shedding light on some of its less-known corners and revealing the legitimate methods you can use to reduce your tax burden. We'll discuss some tried and tested strategies as well as a few unexpected ones, all designed to help you keep more of your hard-earned money in your pocket. Well, worry no more. Today, we uncover some legal methods to save on taxes in India. First, we need to understand the basics of taxation. The world of taxes can seem like a complex labyrinth at first glance. However, when you break it down, it's not as intimidating as it may seem. Let's start with income. You've probably heard the terms gross income and net income. But what do they mean? Gross income is the total income you earn before any deductions are made. This could be your salary, income from a business, or rental income from a property. On the other hand, net income is what remains after all deductions have been made. Now, let's talk about taxable income. Not all income is taxable. Some income is exempt from tax, and some can be deducted from your gross income to arrive at your taxable income. Taxable income is the portion of your income that is subject to tax. Next, let's explore the concept of tax brackets. In India, we have a progressive tax system. This means that as your income increases, your tax rate also increases. The income is divided into different slabs or brackets, and each bracket has a different tax rate. Now, let's touch upon the topic of tax deductions. A tax deduction is an expense that can be subtracted from your gross income to reduce your taxable income. The lower your taxable income, the less tax you'll pay. And that's where tax planning comes into play. There are several provisions in the Indian Income Tax Act that allow for deductions. These include deductions for investments in certain savings schemes, for payment of medical insurance premiums, for education loans, and many more. Understanding these basic concepts is the first step towards effective tax planning. Remember, the goal is not to evade taxes, but to understand how the system works so that you can make informed decisions and save taxes legally. Now that we have understood the basics, let's move on to the various methods of saving taxes. One of the most effective ways to save on taxes is by investing in tax-saving instruments. Let's dive into a few of these instruments, their benefits, and how they can reduce your taxable income. First up, we have life insurance. Life insurance policies not only provide a safety net for your loved ones in uncertain times, but they also offer tax benefits. The premium you pay towards your life insurance policy is eligible for tax deductions, effectively reducing your taxable income. Next on our list is the Public Provident Fund, commonly known as PPF. It's a long-term investment option that offers an attractive rate of interest and returns that are fully exempt from tax. The cherry on top? The amount you invest in PPF is also eligible for tax deductions. Moving on, let's talk about National Savings Certificates, or NSCs. NSCs are fixed income investment schemes that you can purchase from any post office. They have a fixed tenure of 5 years, and the interest earned is reinvested and qualifies for tax deduction. Plus, the amount you invest in an NSC can also be deducted from your taxable income. Last but not least, we have 5-year fixed deposits with banks. These fixed deposits are not only a safe investment option, but also offer tax benefits. The amount you invest in a 5-year fixed deposit is eligible for tax deductions, though the interest earned is taxable. Remember, these tax-saving instruments are not just about reducing your tax liability. They also encourage the habit of savings and investments for a secure financial future. So it's a win-win situation. You save tax, grow your wealth, and secure your future. These are just a few options. There are more to explore. In the next segment, we'll delve into more methods to save on taxes. So stay tuned and keep exploring ways to make your money work smarter for you. Apart from investments, there are other ways to save taxes. Let's dive into some of these alternatives, shall we? One such method is by claiming deductions on home loan interest. If you've taken a loan to buy a house, you're in luck. The interest you're paying on that loan can get you a tax deduction. This can be a significant amount, particularly in the early years of your loan when the interest component is high. And if you're a student or a parent who's taken an education loan, don't fret, there's a silver lining for you too. The interest paid on an education loan is fully deductible from your taxable income. Yes, you heard it right. The entire interest amount can be claimed as a deduction and there's no upper limit to it. This can be a game changer for families struggling with the high cost of education. Another method you may not be aware of is claiming deductions on medical insurance premiums. If you're paying a premium for a medical insurance policy, you can claim a deduction on it. It's a win-win situation. You're not only securing your health, but also saving taxes. Furthermore, expenses on medical treatment can also be claimed as a deduction. If you or your dependents have spent money on medical treatment, those expenses can help you save on taxes. Just make sure you keep all the bills and receipts handy. And that brings us to an important point. Documentation is key. Keeping proper documentation for all these expenses is imperative. Whether it's the home loan interest certificate, education loan statement, medical insurance premium receipt, or medical treatment bills, you need to keep them all. They're your proof when you claim these deductions. So don't overlook these methods. They may seem less glamorous than investments, but they can be just as effective, if not more, in helping you save taxes. Remember, every rupee saved is a rupee earned. So, save wisely and make every rupee count. So, we have discussed quite a few methods to save on taxes. From understanding the basics to exploring a variety of tax-saving methods, we've covered a lot of ground. Remember, it's not about evading taxes, but doing your part while also taking advantage of legal avenues to keep more of your hard-earned money. It's always a good idea to consult with a tax advisor to understand what suits your situation best. It's time to say goodbye to tax worries and hello to smarter financial planning. Until next time, stay informed and save wisely.